This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, December 2nd, 2014. Euro dollar. So the market continues to consolidate off recent yearly lows and looks like it is poised for a reversal to the downside and through those recent yearly lows at 123.58 and to open fresh downside extension towards the 2012 base at 120.40. Ultimately, the structure remains firmly intact. The bearish structure remains firmly intact, with any rally seen well capped below the 50-day moving average. Only back above the 50-day moving average would compromise the current bearish outlook. Sterling dollar. Cable continues to consolidate just off its recent yearly lows at 155.85. A break back above 158.26 would be required to take the immediate pressure off the downside, while below 155.85 would open fresh downside towards the 153.50 area, which is a measured move objective. Dollar yen. Dollar yen still shows no signs of let up after breaking to another fresh 7-year high on Monday, just above 119 at 119.14. The market looks poised for a test of 120, although technical studies continue to track in severely overbought territory across multiple time frames. There is a possibility for a correction, but the market will need to break back below 117.24. That's the low from the 27th of November to confirm the onset of correction and open the door for deeper setbacks. Euro Swiss. Some constructive price action in Euro Swiss over the past several sessions, with the market attempting to break back above the previous September base at 120.45. A break and close above 120.45 will do a good job of alleviating immediate downside pressures and putting the focus back on the top side. Inability to close above 120.45, however, will keep the pressure and the focus on a retest of 120. Aussie dollar. Aussie dollar remains locked within an intense downtrend, recently breaking to another yearly low below 85.41. The break below 85.41 a couple of sessions back opens the door for the next measured move downside extension towards the 81.70 area further down. Ultimately, only back above 89.11 would compromise the bearish outlook. Dollar CAD. Dollar CAD remains firmly locked within an uptrend, with the market in the process of consolidating after recently establishing a fresh 2014 high at 1467. A higher low is now sought out at 1191 in favor of a break above 1467 and towards a measured move objective in the 117.50 area. Ultimately, only back below 1122 would compromise the bullish outlook for dollar CAD. Kiwi dollar. Kiwi dollar remains locked within a bearish consolidation over the past several weeks, with a resistance defined at 80.35 and support by the recent yearly low at 76.60. A break below 76.60 is favored, given the underlying bearish trend, below which would open the fresh downside extension towards the 73 area. Only back above 80.35 would compromise the bearish outlook. SPX 500. The S&P 500 has recently broken down below short-term support at 2052. The break and close below 2052 on Monday suggests we could see the onset of a more significant correction towards next key support at 2030 below, which guards against 2002 below. However, inability to establish any downside momentum on Tuesday would do a good job of keeping the immediate pressure on the top side and a focus on a break of the recent record high at 2077 with a push towards 2100 further up. Gold. Gold is in the process of a major correction following recently established fresh 2014 lows and 4-year lows at 1131 back on the 7th of November. The market has continued its recovery into Tuesday, with Monday's intense bullish outside day suggesting that we could still see further upside. Monday's bullish outside day price action consumed the previous 15 days of range, and this is a very rare and bullish formation. But ultimately a break back above 1256 would be required to officially shift the structure and take the immediate pressure off the downside. That's all for today. Have a good one.